Okay, fantastic. If I could just start with Alex, if you could just introduce yourself and your companies, gentlemen.
Sure. My name is Alex Blake. I work for an insurance company called ACE. We do travel insurance, so it's an ancillary income play for airlines. Yeah.
My name is Robert Jan Meerpoel. I'm the CEO of holidaycars.com, a car rental aggregator in the Netherlands, working as a global provider, B2C with holiday cars, but mainly B2B2C for working for airlines, online tour operators, and technology companies. Besides that, our origin is we come from an agent perspective, so we know how to work with big tour operators and with travel agents.
There is another airline in the Baltic states called Estonian Air, and my name is Gunnar Mägi. I head marketing and development in that organization that has found new breathing after last year's ownership change and new management as of this year, and we're excited and we'll tell you more.
And I'm Bobby Healy, the CTO of Car Trawler, based out of Dublin. We focus almost exclusively on B2B car hire to enable one of our biggest segments, airlines, to distribute car rental directly to their consumers.
Good afternoon, I'm Brian Hogan with Airfill Express, effectively a new branded airline in the Philippines. We have 15 aircraft. That's it. Mr. Steve.
Thank you, Brian. Brian was a late addition as well, so it's great. We just wanted to have a good mix of airline and suppliers here, so we'd be able to get some robust debate. Essentially, the topic this afternoon is about, as I said before, third-party ancillary revenue. Basically, you split down ancillary revenue into two real distinct areas with most airlines. One is ticketed related revenue, bag fees, seat selection, those type of things. What we're focusing on is really third-party ancillary revenue. So we're talking, when we talk about third-party suppliers in terms of car, hotel, insurance, event tickets, those type of things. And what I wanted to do is just get the panel to very quickly give their opinion about what are the current industry trends in terms of third-party ancillary revenues. What are we seeing coming out of the market at the moment? And if I can start with our airline delegates first, because really when we talk about third-party ancillary revenues, we're really talking about, most airlines primarily focus on car, hotel, and insurance. They're the big three in terms of third-party ancillary revenue. And if this topic and this panel was talking about it last year or the year before, they'd only be really talking about those three. So what we're trying to do is we'll take that as a given that car, hotel, and insurance is a pretty big thing. So let's understand if there's any significant trends in that at this moment in time. And then let's also talk about what we see coming around the corner as well as potential new revenue streams. So if I could start with Estonian Airways and then Airfill Express.
This summer, Estonian Air turned to our most trusted source to find which trends should we turn to and pay attention to. And the program was called My Estonian Air, and about 3,000 customers responded to what they care about. And what they care about is what we care about. And so yes, we are having the three big players, hotel, insurance, car rentals, but we're actively looking to other directions. And the number one trend I personally believe in is entertainment, and airlines, low-cost airlines, along with traditional airlines, need licensing partners, need the partners that would provide that service, and that it is at this time very costly to provide internet, and therefore downward streaming is something that we're looking into very carefully. Advertising is a big source. For a decade, traditional airlines have learned from low cost. Here's something that I can share about the traditional airline, Finnair. They were able to expand their food service to the point of sharing sandwiches in the Stockmann deli. And if any of you had been to Finland, you know Stockmann department store, the high class. They're turning around, and other partners is advertising sales, which are still overlooked. Done tastefully, there is room for onboard sampling, product placement, even in-flight radio, in addition to exteriors and other things. Something that Estonian Air paid attention to this last year was ground transportation, and we partnered with buses. It is not enough to connect your main city with good ground, but instead we looked into 4 different transportation companies and invested into that. So those are some of the trends that are outside the value chain. Inside the value chain, partnering with financing seems to be an important trend that we are trying to catch up.
Credit cards, okay. Brian?
Well, I'd say for us, we're looking at anything we can do to drive ancillary revenue, because needless to say, our ticket prices are never going to go up, we believe, for the unforeseeable future. Some of the key things: what do our customers want? What do they desire? If I can put a phone on board like SMS and I can get revenue from that, I do that overnight, because the Philippines is one of the SMS capitals in the world. What else can we do to help facilitate this? Transportation. If you come to the Philippines, for example, I was in Tagbilaran, which is Bohol, and I paid more for my transportation than our average passenger pays for a ticket, just to have a van take me from point A to point B. So I think whatever we can do to get from the time of the booking, from the time we deliver the passenger to that area, there's opportunities. I mean, we're looking at so many different things, such as, can we tie up with some of the local transportation companies to actually, and this isn't a low-cost model, but if we can make money from something, we don't care. Can we pick up your baggage at your house and we'll deliver it to the hotel at the end of your destination? So you don't have to bother to wait for your baggage at the thing. So I guess, you know, these are just brainstorming ideas, but at the end of the day, it's all about ancillary revenue. We only do 8% of our sales today. About half of that is cargo. We want to continue to cargo. We don't want to expand our cargo as much as we can. And honestly, we are not doing much today. Our insurance isn't doing as well as we need to. We need to have more partners when it comes to cars, when it comes to everything else. But ancillary revenue is the way you're going to live or you're going to die in this marketplace.
Okay. To our suppliers, Bobby, Alex, and Robert, what do you think of the latest trends, just building on what the airlines have just spoken about?
I think there's a lot of meat on the bone still,
okay,
with the top 3, and a very important part of what we do is how we, you know, I hate to use the word monetize, I'll use it anyway, how we monetize, you know, the traffic. And an enormous amount of airline traffic doesn't correctly retail car rental. You know, that's what I'm expert on, that's what I'll talk about. But I think there's huge meat still on the bones there. Mm-hmm. And there's a kind of a reticence on the behalf of the airlines to really go for it still. And kind of it's follow the leader in many cases, where this notion of, well, we're an airline first, we don't want to threaten the airline's sale by introducing ancillary. You know, this thing is still a hurdle that has to be overcome. So, you know, there's plenty of meat still there in car rental, and I imagine also hotel and insurance that we focus on. And the difference is alarming, what you can do from one year to the next with the same number of passengers.
Just to back that up, I know that Virgin Australia actually changed their
great example.
Their supplier.
Great. You know, I just presented that this morning.
There
actually.
we go.
Let me go right in there, because actually Virgin Australia gave us permission to publish these conversion stats, and as an example, you know, they didn't want to, you know, insult their consumers by showing the 3 car offers alongside the air offer before the consumer purchased the flight. And so what they introduced was a checkbox that said, right before we show you the flights, check this box to see car options with your flight. And so they got a certain degree of conversion from that. Certain number of people said, yeah, I want a car. They check the box, they see the cars, they accept. And they switched that off, it's about 3 months ago now. They got rid of the checkbox. They didn't ask the consumer if they wanted to see the car or not. They showed everybody the cars and got an immediate 25% uplift in their conversion for car rental. You know, just that simple thing. So 25% more of their passengers wanted car, but for some reason were physically unable to check the box. There's huge need in car rental.
Could we say that this is one of the keys for the future, opting in, opting out really easily, delivering it through mobile media, and involving a variety of partners throughout the process?
Alex, one thing, as we sort of go along on this theme, insurance is always the interesting one about opt-out, opt-in. So perhaps you could bring that into your perceptions about what's going on.
Well, absolutely. I think, first of all, to answer the question about trending, right? So it's interesting you raised that there's a lot of meat on the bone. I totally agree with that. I think, however, that there's a lot of disparity. You see airlines that are really, really good at ancillary income and have 20 things, and you have airlines that are just now starting to do insurance and car hire and so forth. So I find that interesting. I do find that with airlines, and particularly low-fare carriers are the ones that are very good at this, right? That know how to really drive ancillary income. Brian, as you were saying, it's such an important part of your bottom line because you don't make that much money off selling tickets anymore, right? So for a product like insurance, right, we were sort of, you know, maybe the big three were also the first three, right? And now that there are 20 things, it's always the battle to stay relevant, right? And so how do we maintain conversions? How do we make sure that we're always maximizing value for the airline partners, coming up with different ways for them to maximize what they're able to do, going beyond the booking path, for example, right? Now, to the point that you're making, Steve, about opt-in and opt-out, this is a very relevant topic, I'm sure, for a lot of people in the room, because of new rules, at least for insurance anyway, new rules here in Europe that have come over the last couple of years, really sort of outlawing opt-out sales, right? And so where airlines were making a lot of money, you know, generating, say, 30 to 40% conversion rate selling insurance, now all of a sudden that's gone down to 10 because it's not legal for them to do opt-out anymore, right? So it's really the job of the insurance company to help the airline find ways that they can make up those gaps, right? And that comes in a variety of different ways. Selling different products to different people, looking to maximize yield. You know, not everybody has to pay one price for insurance when they're paying various different prices for tickets based on seasonality. It's you know, if you've got 10% of people buying, what about the 90% that don't buy? How do you recapture those people? How do you identify frequent flyers and really look at how you can service those people with insurance? So there are other ways, you know, it's a very relevant topic. Obviously, opt-out is great, right? But we've seen in Europe it started to go away. There are other markets around the world, at least for insurance, because of the fact that insurance is regulated, you know, not by aviation regulations, but by financial regulators in most parts of the world. This is possibly something that's going to continue to happen in a lot of other parts of the world. So then it's all about, so how do we make up that gap, right? Type thing. So.
Okay. Robert?
I would like to see it from a marketing perspective. I think we have ended the phase of seeing ancillary product as being a product placement on a website or in a package product situation with low-cost carriers. I think that we have to talk about marketing in terms of an airline tries to attract customers, tries to attract visitors, the same as an insurance company or a hotel aggregator or a car rental company. We have to utilize all marketing techniques together in a partnership to find the maximum conversion from your visitors to bookers. And I think today we're only looking into the customers that have booked a flight or a round trip. And those customers are being targeted in the process to find additional and ancillary products. I think that's the big difference that we are seeing with the partnerships that we have with airlines. They include us in their marketing schemes with retargeting, persuasion marketing, all the tricks and everything we try to do to make people to book a car. But I think cross-sell can be done on a higher level and can be added value to buy tickets instead of the other way around.
Okay, fantastic. I just wanted to open up to the audience if there was any questions at this point of time, and I'll throw in the mix that one of our panelists will take you out on a date if you actually ask a question. So has anyone got any questions? Free dinner, come on. Look at them. I mean, the brains trust of third-party ancillary revenue. Any questions so far? Everyone's just too shy now, I think.
If you're a woman, by the way.
Yeah, well, you never know what's out there. So, anyone question at the moment? No, okay. What I'd do is I thought I'd continue on, and this is particularly to our suppliers. Typically, third-party ancillary revenue relationships has just been focused on commission. Okay, so typically a commission or a revenue share or anything like that. To me, commission's boring. It doesn't incentivize, it makes you a bit of money, but it doesn't incentivize the airline, and the airlines tend to be risk adverse. So is there a model that you guys would propose that would see a little bit of risk assumed by the airline, but would see higher upside for both parties in terms of that, and try to get the skin in it again? Because I think one of the biggest problems for airlines these days is that they get lazy. It's that, you know, they sort of see commission come in, but they, as you guys sort of said, you know, they might implement card trawler or what have you, and then they just sit there and go, oh, it's a nice little 10% coming in and I can't be asked doing something else. Whereas you need, I think, something that breaks the model, that actually incentivizes them to really work with you guys to actually try to get an optimal outcome for both parties. So you want to talk about that?
I want to start.
The airlines, okay, what's fine, go for it.
It doesn't matter which approach you will end up with, as long as you have the basics, and that is that the company has the agility and wants to take advantage of you in a good way, and is seeing an airline as a way to break out. They need to have that startup feeling, because this is what we're having in our airline, and we are hungry, and they have to be hungry. So the end result could vary. You start out as a pilot, you reshuffle the terms after the first trial, but what is critical and an absolute must is that ambition that the third party should have.
Okay, to our suppliers?
From the supplier side, I'll get things kicked off. So I think it's a great question.
To be quick.
So commissions are always a big focus, right? You know, I can offer 5 more points than the next guy, and you know, hopefully I get the deal. But I agree with you 100%, right? I wouldn't say that they're boring, but it's about selling more, and it's about maximizing yield, right? So, you know, you can sell, say, $100 worth of ancillary income, the airline's making 20% commission. You know, you can either pay 5 more points and then the airline's making 25, or you can sell 200 and then the airline's making 40, right? And that's really what it's all about. It's about selling more, it's about increasing yield. You know, I mentioned a couple of ideas previously. You know, Brian, I don't know about air fill, but most airlines, you know, in the Christmas season, particularly in the Philippines, you're going to charge a little bit more for your fares. So why wouldn't you do the same for insurance, right? And then, you know, whether you're getting 5 more points or 10 more points of commission doesn't really matter. You're making a lot more money because you're selling more, or at least you're increasing the yield that you're getting out of it, right? And I think that's what it's about. It's about maximizing relationships, and it's about, you know, and I do, to a large extent, think that this is the job of the supplier, to work with an airline to find ways that this can be maximized. But it's about maximization, right? It's not necessarily about paying more percentage. It's about getting more top line.
Yep. And excellent answer. And just in that theme, if you can, I've just got a second question for you, and then guys bolted on to yours. Is if Alex, you were talking about an average airline that implemented insurance versus one that was truly optimized, so to the point that you're talking about, and again, gentlemen, for car as well, if you can talk to that. What's the difference? So let's talk about magnitude in terms of percentage, in terms of conversion. What are we talking about from, you know, an average Joe airline that just sort of sits there and chugs along and has a nice little commission and what have you, to someone who's really trying to squeeze and optimize, and the same thing for cars, guys?
Difficult to say specifically, but you know, I'd say that the opportunity is 100%, right? So it's doubling, basically. It's not just about conversion, right? Yeah. Because it's about doing various different things and looking to increase yield. I think conversion can always be maximized. There are a lot of ways to look at that. You know, there's variant testing. There's, you know, I've always thought you put a little cartoon in the insurance offer, and you're going to, you know, increase your conversion by a couple points. There are things that you can do to increase conversion, but that combined with yield, combined with maximization, we're looking at a 100% increase. So then again, it's, anybody can pay 5, 10 more points of commission. This is about doubling income. So,
Robert?
I think that a partnership with an airline, if you base it on the number of passengers carried, we have experience with airlines that are happy with 20,000, 30,000 bookings based on the volume of 5,000 passengers, which is a fantastic number. But when you change the model from a commission or a revenue share basis to really a partnership where you want to maximize and optimize conversions, then you have to see the bigger picture of visitors that probably will not book for the full 100% an airline ticket or a hotel or a car. But in the combination we have access more in terms of an advertisement or a media budget towards the traffic and visitors of your clientele.
Mm-hmm.
And then you can double, you can triple. It's an easy access because customers are out there to book travel products. Maybe not always with you, but the access to those kind of visitors is hot, and we want to have those traffic to get a maximum boost for your conversions.
Okay.
Ours is a more vulgar proposition usually, because we often go into large airlines with established relationships with single car rental companies, Hertz, Avis, Budget, Europcar, and we just say, well, we'll make you more money. It's not revenue share, it's not commission, it's not guarantee. It's we think with your traffic, with a multi-supplier model, and with better execution and better merchandising, because we can focus on that, whereas a car rental company can't. We'll deliver better revenue. So the airline, no airline manager or ancillary revenue manager in their right mind is going to take a better looking solution that delivers the same or less revenue for some increased risk. You have to really, put your money where your mouth is. Our numbers stack up, and we publish with Virgin Australia 70% uplift, with Hawaiian Airlines 290% uplift in conversion. I'd like to think that's all because we're so great, but in actual fact is we're usually competing with a single supplier model, which is an advertising model, which is low risk for the airline. It delivers a predictable check every year, and there's no risk involved. But a better model is a retailing model where the airline acts as a retailer in front of their consumers. They have a retailing proposition, and consumers will actually go back to that airline as a retailer of car rental. And then just last little bit on it, one of our customers, Norwegian Airlines, they get 12% of their car rental bookings from SAS customers. And the reason is that SAS don't retail car rental properly, and Norwegian do. So if you do it properly, you'll actually become a shop front for your consumers for car rental, at least I know of.
I think a quote that sort of sticks in my mind was my old boss, who's actually presenting tomorrow, sort of said that, I was working for an airline, and he said, we're an online retailer that happens to fly planes. And I think in that instance, it's actually quite true if you want to get this correct. And Brian, let's talk about frustrations. What do you think of some of we won't go there. What do you think of some of the biggest frustrations in terms of ancillary revenue optimization for airlines? What's keeping you awake at night?
Oh my God, there's too many things keeping me awake. But, it's really optimizing, no matter if you bring in insurance, you bring in this, you need these. These are basic. Because at the end of the day, when a passenger when they think about going somewhere, do they think about just flying? Hell no, they think about everything. They think about the hotel, they think about the car, they think about the whole stream of transportation. So honestly, we want to be able to provide what the customers need, whatever the hell that is. What keeps me up at night is how do we optimize it, okay? Today we have insurance, we do not have cars, we have some hotels, but is the uptake enough? Are we making enough money from that so that I can lower our fares, so that I can have the load factor higher, so that I can buy more planes and grow the business? So all of that concerns me. It's really optimizing, bringing in the right products, and when you look at it at the end of the day, how many people are coming to the airline's website? I mean, quite a few, right? Compared to typical websites. So honestly, what can we do to, like you guys said, be the retailer for everybody in the marketplace? Because we have more people coming to our website than the majority of companies within the Philippines, and I'm sure it's for everybody else. So how can we leverage that accordingly? And that's really the challenge going forward, because I'll say it again till I die, it's all about ancillary revenue. It's not about the ticket prices anymore.
Cool. Questions? Yes, finally. Oh, fantastic. 2 dates to come out tonight. That's fine. That's, there we go. Just the front here.
Bobby buys me dinner.
I'm not taking
Yeah, I
you
was
out
going
for
to
a
say,
date.
which panelist
I know that guy
take
too
you
well.
take fancy to, and what day can we can string this one together?
Well, he's Irish, so it's not going to be much of a dinner. So
That's fair. You're cheap.
You shouldn't joke about the economy anyway.
Okay, running out of time. Quickly, sorry.
Jay Sorensen with IdeaWorks, and this is a question for the vendors. There are a number of points of contact between the airline and the customer. The website, in-path booking, confirmation email, check-in, on board, at the airport, kiosk, whatever. In your experience, which one does the airline most often waste an opportunity in terms of what is the thing that you're always trying to get them to do, but they never seem to get around to it?
I don't want to insult some of my airline customers in the room. I just have to check if they're here first. They don't implement cross-sell. 40% of car rental bookings on an airline website are unsolicited cross-sell, and some of them won't switch it on.
Cross-sell meaning?
Cross-sell is where, or unsolicited cross-sell for the fancy, where the customer didn't ask for car rental, and right before they purchase the ticket, you offer them car rental. One click to accept a car rental that matches their air itinerary. 40% of their revenue gone because they're afraid to interrupt the flow of the air sale.
Yeah, I would say that by the time a customer has gotten to that point of the booking, 99% likely to complete it, whether you offer them something else or not, right?
Yep.
I want to add to that I think when the customer receives a confirmation email with your itinerary, I think the customer is hot at that time. And it seems that airlines are afraid of using that specific moment, short after booking, to utilize it as a commercial upsell opportunity, in my opinion, to be combined with other ancillary products at one specific time. And even better, combining products is giving added value or a discount or something extra to reward the loyalty of your customer. Don't wait with your pre-departure mail. As extra, it needs to be done, but the highest conversion, and I agree with Bobby, airlines should do immediately after the confirmation of your flight.
I would say, I just want to add one thing, and this is a pretty insurance-specific thing. But for us, we see that there is often a huge focus on price, right? So we want to offer an insurance policy that is 5 cents cheaper than the other airline in the market. And the truth is, it doesn't really matter, right? Because nobody's really going to sort of go buy from one airline to the other. And I think that there's probably a good element of this to car rental as well, right? Now, of course, you don't want to be exorbitant about it, but somebody's in a booking path, they're there to buy airplane tickets, right? So if you make the purchase simple, very easy, one click, the price sensitivity for that particular product isn't going to be as great as if they were there to just buy that product, right? And I think that there's oftentimes, I think that airlines decrease their yield a lot because they believe that this price competitiveness, I guess price competitiveness is very ingrained in an airline's DNA, right? And so they think, well, the fares obviously have to be ultra competitive in order to get passengers on board, maximize load factors, buy planes and grow the airline. So everything else has to be, very competitively priced too. And I don't believe that again, it can't be exorbitant, but I don't believe that price sensitivity for that particular ancillary product is to the level that it would be for a fare. Yep.
I can put my airline hat on when I was head of e-commerce at Virgin Blue before it became Australia and everything else in between. We used to just sweat about it. Anything that touched the booking path was something that we sweated about all the time, and it was always, even though my boss used to have the mantra about online retailer, it always came back to, well, actually, we need to sell a seat first. We can't lose that fundamental selling a seat. So it's always that difficult balance that you've got to have. Okay, I had a second question Was it you, sir, up the back there on the table? Have you got just a microphone? Oh, you got a microphone. You're already prepared. Right. Fire away.
Paul Byrne from OpenJaw Technologies. Really for the airline people on the panel, maximising ancillary revenue is really around understanding the customer and offering the right combination of product, kind of at the right price, the right time in the shopping process. So it's not really around just dropping at every combination of ancillary product that's there. So maybe you could talk a little bit about understanding personalization, the combination of the various products and offering those and how you understand and how you do that to maximize that revenue.
I'll start again.
Fire away.
Again, what we learned from customer research was that customers are interested in ancillary revenue as long as it's not punitive. And we try to match our partners based on the added value, added services, not the basics. That this is different from many low-cost airlines, but we do have a brand to protect, and that is the initial selection of any third-party partner that we would be looking at.
Okay, thank you. Brian?
Yeah, just quickly, we have a pretty immature market in the Philippines, so we have to give the people what they want. So what does that mean? It's the hotel packages, and it's we started off we have a deal with Star Cruises in Singapore. So you can book our flight, you go to Singapore, you get a hotel, and then you can go on the cruise to Malaysia and Thailand. Because more and more of the customers have told us that through social media. Going above and beyond it, we have to take baby steps, because at the end of the day, we don't have a huge staff at all in the company. We don't have a great system at all. And the economy is growing, but it's not growing that fast. So what does the customer want? And we really don't understand that yet. So we're really not going to jump down the path and add a ton of things, which is going to blur the booking process and everything else. We need to focus on selling the tickets, but selling ancillary. But what's selling ancillary? What's important to the people? They want to get from point A to point B. They want a hotel. They want the transportations. I'm not sure cars would work well in the Philippines, because not only would you have to have a car, you would have to have a driver. So, because there aren't street signs, there aren't maps, you can't park anywhere. So, I mean, there's a lot of special needs in the Philippines, but at the end of the day, it's an incredible growth market, and it's going to continue to grow at double digit for the next 10 years.
Okay, fantastic. Any more questions from our esteemed audience? No, fantastic. Well, I don't have, we got one. Sorry, just down the front there on this side. Sorry, did you put your hand? Yeah, that's it. Thank you.
My name is Ben Letwin. Question is the ancillary revenue, the dimension that I'm not hearing is when. When would you offer these opportunities? I'm hearing a lot of examples of sort of impulse buy right at the airport or on the aircraft. Could you define the when?
I'll take that. We have 11 touch points, as we call them, per airline booking. The most important ones are pre-purchase confirmation, so in other words, right before they hit the purchase button for the flight to sell car. Confirmation page, as Robert said, so directly after they've made the purchase, and you get both types of customers there, the ones that are afraid and just want to book the flight and then book the car, and vice versa. But a very interesting new one that we have is the arrival. So if you look at car rental, 60% of car rentals are not at the airport. Yet if you look at airlines merchandising car rental, they only sell car rental at airports. So the new one for us is we send the passenger a map of the area where they're flying into, with prices all around the map based on their itinerary for car hire, and then they can click and browse the map to get availability and pricing all over where they're staying. No. And that suits the customer that's flying into an area where they don't want the car rental when they arrive at the airport. They get an easy transfer to the hotel, but they need it the day after, so on. So there's all sorts of areas, but we hit the customer 13 times per flight booking.
Anyone else? Robert, Alex, anyone?
Well, quickly,
Yep.
we're only 40% internet. The rest of our sales, we have sales agents, we have a huge network, multi-channel distribution. So we've got to sell these things face to face. And not only that, when the touch points, when you come to the airport, we're trying to upsell as much as we can. So it's really not, sorry, but it's not the point and click because the internet penetration is very low in this marketplace. So we have to adapt accordingly. So.
Maybe the last one. I think successful airlines are really dynamic with their partners to find the best optimum. And I think in terms of timing, there's never the best time. You have to optimize all the times. You have to run A/B testing, multiple tests per day to see where your optimum is for that specific period in the year. And no matter if it's 5 contact points or 12 or 13, I think it doesn't matter. If you're decisive to execute a plan of action to get a maximum conversion with a scheme, with clear goals, you have to include your partner to get the maximum out of your visitors, out of your bookers, and out of the traffic from the website and from the package. It never ends.
Okay, I think, I don't know about you guys, but I've started to get a bit of a nervous twitch because I know there's free alcohol outside. So, and it is 5 o'clock, it's been a very long day, but thank you for staying back. I'm really impressed with the attendance. And if I can ask everyone to thank our esteemed panelists today in terms of myself, obviously, but the rest of the guys. I had to do that. You're okay, Steve. Anyway, that's okay. Thank you very much. Thank you.